Very good morning to all of you. Very good afternoon, rather. It's around 1:44, and we are having a live session with Indian markets. And the many interesting things I wanted to share with you. And I keep getting a lot of posts regarding sometimes stock, sometimes getting a post regarding the fact that uh, the broader view, what is the broader view of the market. So I thought these videos are going to be much more amazing with you uh, all inside it and all asking me questions and all asking me to share something when I can show it with a chart and with a live chart more than that. So that makes it very important. And just a small announcement to all of you. So what I'm going to do is you all can track the kind of calls we are sharing on Telegram. So some of the calls, okay, I'm going to explain you how the logic came about. And I feel that is far more important than actually coming to terms with just taking the trade and making some money. Because the logic will help you make the money again and again across different stocks and different time periods, etc. So without any further ado, I'm going to start sharing my screen now and invite from the past live session some of my students I have in the paid courses, so they may ask any question regarding anything they have learned also in terms of the current market. And if you have any questions, you can start asking, because in the middle of the webinar, then when I'm explaining something, then that time if you ask, better you ask now. Any questions? Okay, as you're typing, I will wait, not a problem. So guys, this is the live market scenario in the on the hourly chart. So this is the daily chart, you can see. This is the 15-minute hourly chart, right? I made a post on my Telegram channel regarding the fact that we are trading under important support zones. Now these support zone, okay, now every lower low below a support does not account for a trade. A lot of people have this myth around technical analysis that every higher high is a breakout, every lower low is a breakout. No, it isn't. We have to see what the structure is, what the positioning is, and that kind of thing. Now, of course, if something is trading below the lows of the last few days, it does show us a lot of weakness. It does show us the fact that yes, at least the bulls are not in control. And if that low is broken with a lot of a lot of pressure and it is sustained, then of course there is a further downside. Now that is why I did not mention it in the trade format. I mentioned it over the format of actually just a chart, that okay, we are seeing this on the chart. Now something may happen, may not happen, because I'm not really seeing any particular structure which follows through. Now, somebody may say that, okay, no, sorry, last time you told us that what if support is tested a number of times. So this support is tested once, twice, thrice. And yes, according to that, it is very important. But on a subjective level, please try and understand that we are looking at a different impulse over here. So this move compared to this move, compared to this move, are different parts of the same move. Okay, are different parts of the same move. And if the move which are of the in the same direction, let's take the logic over here. When a support breaks after retesting 2 or 3 times, it is of course very bearish, undoubtedly, no doubt about it. Okay, now what happens when a support breaks but it is also a part of the same move? So some move that started over here and possibly a part of the same move, we don't know until things take a toll, right? And it may make lower lows, of course, but there's a difference between a lower low and qualifying it as a breakout where I started from. So this is one move, right? And this is a low. Another low which is testing around this area. Now, which belongs to this particular impulse also, along with the bigger impulse, right? So on and so forth. I see the third move coming and coming towards the low, towards the same direction and in the same zone. So this may be, as much as it may be bearish, it may also be the fact that around this zone which is being still established as here, okay, when patterns are not very clear, sometimes the zones are being established. When patterns are not very clear, sometimes just the zones are being established. So you have to wait and let the market show you what zone is being established. So that is one thing which I would like to tell all of you, that maybe on some of the days when I'm having live sessions, sometimes you'll see live session happens and then you have a trade according to what we discussed. Sometimes we don't see anything much, simply because the market every time is not ready to budge, in a very big manner. So we have to be patient regarding when those times come. And when those time comes, we have to be then patient regarding the kind of execution we have to do. Now, I've always told you all to stick with the trend. And if the overall broader trend is down, there two things one needs to consider. How fresh the move is, number one. And number two, if it has come to an extreme, what do I do? Do I stop or do I not stop? So like in the one of the previous live sessions, I was showing you all how the RSI operates, right? So let's say for example, right? This is the 7 period, sorry, 14 period RSI, right? And we are seeing multiple divergences happen for number of times. Okay. Now the essence that divergences of this category give me. Now you may say, as market has fallen so much, so divergences are bound to happen. Right, market has fallen so much, divergences are bound to happen, but there can be lower lows, and the divergence can be absorbed through the patterns. Now, none of the divergence are being absorbed through this pattern, because if the and I want to ask in the middle. Let me just finish. Then I want to ask if all of you are understanding what I'm trying to say. There's a pattern over here, which I may say a pattern because there's a consolidation, right? And I'm saying that it has made lower lows. But RSI is not making lower lows. RSI is still higher than its previous low. So therefore, this divergence, which was, this divergence is created rather than absorbed. So RSI should have flattened out and actually made a lower low. Then it would have proved to me that there is more strength on the downside. And RSI in its essence is what? It is momentum, right? Raise your hands, those who are understanding what I just said. Raise your hands, those who are understanding what I just said. Good morning, Sandaramji. I saw your message. Okay. Most of you are understanding what I just said. So some of you are not, perhaps, who have not raised their hand. I'll explain in a small manner again. I'm saying that there is a possibility. Every downtrend is different. Okay. This time the kind of downtrend we saw, we may not see this kind of a downtrend in some other year altogether, or maybe another period of 4 years altogether. But we may see something sharper, we may see something more mellow. Now, in this kind of a downtrend, there has been divergence in RSI and price. That means that RSI, which is a momentum indicator, is continuously making lower, RSI is not making lower lows, while the price is making continuously lower lows. Okay? So the lowest level of RSI I saw was this. This indicates to me that the highest level of momentum was on these falls. And of course, then the market got used to giving a downward momentum. So after that, we saw more lower lows on the price. But the RSI hasn't touched that kind of lower low, and neither has it done that today. Even though markets made a new low and took out all the lows of the previous day, the market has not done this. Now I started with the point that every lower low and every high is not a breakout. Okay, there needs to be structural pattern, even confirmations like market breadth, volumes, etc. So there was a thrust in the morning, but it did not sustain. And I just posted chart to show you. It is a sign of weakness if it is trading at lows, because that shows that there is a tendency for the market to go much lower, right? But there is no structure present over here, which is very, very convincing. Of course, there have been cases where the lower lows once broken have started going down. But in this case, a maybe scenario is, or alternative scenario is, that this impulse is the lows are a part of the same move. So when I say the lows are part of the same move, imagine something like this. There is a high, there is a high, and there is a small higher high. Now, this is the part of the same move. Now, making three highs one after the other. But after that coming down, this is quite likely to happen because the real strong trend would be the higher highs were had much bigger differences. So here the move is same and the lower lows are not having much bigger differences. Okay. So this zone is anyway very important from the physical point of view of the chart, but also from the structure of the movement which is happening. It is important. Now, of course, what happens is that in a certain case, it would not be possible. It would not be possible that uh, the we can already say how it is going to unfold. But if we look at the kind of market breadth, the kind of participation, the kind of the kind of volumes and the kind of momentum with which it broke, nothing was really supporting a very strong sell. So even though the system may be telling you that okay, go short, that your system is saying that okay, if something is touching its lows like this, I should go short. It's okay to get stopped out, but because these are markets and this is trading. But sometimes you can decipher that the market is not so bearish just by looking at some other factors. Okay, and that is also fine. So you must understand the subtle points that the wave structures are far more important than just a higher high or a lower. Right? Now, what can be this was the bull case scenario, that this is a part of the same move, and therefore the breadth, that's the number of stocks participating strongly on the downside, uh, has completed its most major portions in some ways. Okay, what is the other scenario? What is the other possibility? That if this is a part of the same move, yet the market is bearish, we have to establish these highs as the points where the market is not likely to come. These points where the market is not likely to come. That is, only when the market makes certain higher highs will I get a confirmation that yes, possibly this is not so bearish. Okay. So these are the subtle points we need to understand. This is what people call, or what you may have heard somewhere, this is what is called the no trading zone. When your alternatives on both the bullish and the bearish side are little different. And what professionals call the no trading zone, where the professionals sit aside and wait for the moves to happen, wait for the market to show them where it is going to likely be moving very strongly. This is what the professionals do. Professionals define the areas of no trading zone because the variables they are seeing are not giving a balance, are sort of giving a balance. They're not giving a very strong bias towards one direction. Now, what the non-professionals do is they try to put the over-imagine, try to get, over-imagine and try to get caught by the markets because they're just seeing that, okay, market is going down. The market is trying to reinforce in your mind that I'm going down, I'm going down, I'm going down. And yes, I have myself been selling in the recent past. Selling has also made a lot of money. That's not wrong. Okay, you should be with the overall trend. But when the market comes to an extreme, what is showing me the extreme in this case? The RSI is showing me the extreme. How is it showing me the extreme? Do I go by overbought, oversold? No, I don't even believe in overbought, oversold. I have a different philosophy for overbought, oversold, and that works much better. And this divergence is what is telling me that the pattern which was over here is not really holding up the downtrend. This pattern is just showing me the last phase of distribution possibly, a last phase of movement. This is not even holding up the downtrend. If a pattern was holding up the downtrend, RSI would have flattened out and made lower lows later. Are you getting my point? So these are the times when the movement or the momentum, after seeing strong one-sided movement in the market, we are seeing the last of the moves of an impulse. And the last of the move of the impulse, which is starting perhaps from here or from here, is absorbing a lot of public want to sell in negative sentiment. Okay, they're absorbing a lot of public in want to sell. Last few days, momentum, the public sentiment has been very, very bearish. So if the public sentiment is very, very bearish, till a point there will be a frenzy of one-sided movement. But after a point, there is a possibility that the market reverses and give strong pullbacks, even if they are temporary pullbacks, to shake out the weaker hands, right? So the weaker hands will get shaken out, and then the downtrend resumes. This is the general philosophy the market follows. Now let's take example from let's take a bank nifty, since at least we take the indices, right? So this is bank nifty. Again, similar philosophy. We are seeing a huge divergence between price, which has made a lower low, and the last time it made a low low. And this is the hourly chart, so it's not really a very small time frame. If you understand what I'm meaning, there's not really a very strong time frame. Now, if somebody got shorted and got a little trapped, it's fine. You follow your stop loss, or if your stop loss is hit, you take the stop loss. But these are the divergences. That these lows and this low, look at the way this divergence is happening. Okay. Now, public sentiment has been bearish, but public sentiment, when it comes to extreme, market starts reversing. I wanted to type something regarding this in the morning, but you see how much more easy and much more valuable it is to actually give it out on a video where I can show you what I'm meaning. I'll show you some logic. And I still don't mean that the market has to just go up, although there is a strong possibility of that. But what I mean is that it should give some more time in the no trading zone, where we can see that a lot of stocks which have the gears shifted in the very strong downtrend, they take a rest and then they go further down, or they give a strong pullback. Whereas some of the stocks which are already in an existing uptrend, they settle down and then they start going up. That means that would be like stocks like, say for example, TCS or other IT stocks, right? So when they start moving in a certain way and they start showing the rest and the strength again, like it's anyway being strong, right? So those situations will be far more lucrative for the entire market to move together. Okay, that will be the entire market move together, and we must consider the fact that, like last time I said, that overall, if there is bearishness, you have to consider that fact that overall bearishness is there. So if you want to trade a strong pullback in, say, for something like Yes Bank, because say for example, and I'm not giving any call over here, but I'm giving my analysis, I do expect some sort of pullback regarding Yes Bank, regarding its charts and regarding this, but that pullback may be translated into a sideways movement. Okay, your habit of doing the correct thing is important. So the correct thing is to stick to the broader trend, because if a pullback is translated into a sideways movement, it becomes very difficult for someone to trade it. So it becomes a very low risk, a very high risk and a high reward sort of probability. Now you take a high risk, that means you take a call on Yes Bank, say you want to take the day's lowest stop loss, which is anywhere 20 rupees, okay? And then you're betting something which is against the broader trend. Whereas you very well know that most of the strong moves and the big moves will come only when you're with the broader trend. So rather than doing something like this, that trying to play the pullback of the strong stocks, of the weak stocks, you want to be on the stocks which are strong. Like for example, and you want to sell the stocks which are weak. Like yesterday, we had some buy calls on, sell call, STBT call on escorts. So this is selling the stock which is already showing weakness, right? There is a selling on sell call on Walk Pharma in terms of STVD, right? There's something already showing weakness, already showing weakness. Now if there's a system and different parameters regarding all that. I'm not going to discuss too much into that because it will not be possible to cover so many stocks. But and personally, I want you to not focus so much on not focus so much on the analysis only through the calls, but understand the analysis overall with the live markets, right? I'm going to share some analysis, like for example, what happened with Bank Nifty when I gave that sell call recently. Okay. Now in these areas, there was a sell call given over here. Now these areas were very good sell zones, right? Why? Because in the morning first hour only, I saw that there was within the zone of a bearish belt hold line, within the zone of a bearish belt hold line, okay, and another red candle, there was a shooting star in the morning. So when in the zones which are weak, there are weakening candles, I get a very good cue. Apart from that, the wave structure, etc., was also in the favor of more on the short side. So the high of the day became my stop loss, and the area of 386 roughly was where the sell call was given. The next stop with the first target was given was the nearby support, and we saw how beautifully the support was later broken. So that came to the second target, right? Right now we see again markets as we are in the live session going slightly more strong. Sorry, yeah, this one. This is the 15 minutes. Now that means what if the breadth is not that weak, or if there are strong pullbacks, if the breakout is not really with a lower low on the momentum or a significant low on the momentum, that means probably the breakout will not work out immediately, and it may work out on some other time. Okay. Now let's take it from the bullish perspective. Now, okay, what if scenario? What if this entire thing is bullish? Okay, raise your hands. I'm going to put all the hands down at the moment. Right now, freshly raise your hands and show me how many of you think that the market is actually going to become bullish from here. How many of you think market is going to become bullish? Okay, roughly two or three people think market is going to become bullish over here. Fair enough. It's a very individual thing, and it does not have you don't have to be right also. You don't have to be wrong also. There's nothing like that. But yes, I'm getting a fair idea that some of you are thinking that the market can be bullish. Now, what I'm going to explore with you all is the factors which may show us the evidence of bullishness. Okay, apart from the structure which was not showing a very strong evidence of immediate sell, what are the evidence of bullishness? So for that we need to understand. Let's say for example you have taken Nifty. Now on my charting software, I go to the list of Nifty 50 stocks. Okay, and what I generally do is I stick to the daily chart and the hourly chart, and because I have to see if there is a strong transition, that means a lot of stocks have to be very strong buys or show very big strength in the up move. Okay, they have to show very big strength in the up move. Now, is that happening, or is that happening in the market? Because when bottoms are made, they're sometimes quite sudden. Okay, more often than not, they are quite sudden, just like the tops are made. Now, are we seeing that kind of scenario overall on the Nifty 50 stock? Are we seeing a potential just a pullback and then this thing? Now, I mean, just down from A to G for Gale, from A to G, and I'm not seeing that there is a very sort of strong movement. So basically, these pullbacks may be okay, maybe something like HDFC Bank I'm seeing is an uptrend. But then yes, maybe I'm seeing something like HDFC. Yes. Okay, I'm seeing some which will obviously be there. That is why the market came back up. But say for example, I see something like Hero Honda, and overall it is so strongly down then I do not want to consider this bull move as something which is a reversal. Okay, so I see these small things and get an idea of market breadth. So I can also say that as much as I'm saying it is not so bearish when it hit the lows, it is not yet so bullish also. Okay. Now, of course, as I'm talking also, it's going a little down, but that's not my point. That's not we don't have to be impulsive from that point of view, right? So basically, this is what is defining a sideways zone. That overall on the index, the variable factors are actually not triggering a very strong sell also, and they're not triggering a very strong buy also. So you have to let the market play out a little bit. And I'm not saying that you have to stick on your screen every minute of the day. I never encourage that for traders. I really feel that that is something which is very important, that you sit aside. Okay, you sit aside when the market is not ready to budge. When the market is not ready to budge, you sit aside. And if you are able to do that, then the market will show you times when your patterns and your alignments come about. So that is the kind of time you want to stick to, right? So on that note, we'll call it a day today. And if you have any questions, you can ask. Because if I keep these videos short and sweet, then I don't want to take all of your time during market hours, right? But enhance the learning experience. If you have any specific questions, you can ask. It can be regarding some stock, regarding some concept, etc. Yes, I'm waiting for questions. If you're typing, it's fine. There's a box type questions for those who are not understanding. There's a box there, the chat box, to ask me questions. Directly the questions will be coming to me. Okay, very good question. So somebody is asking, sir, last time you showed us the option chain. Can you show us the option chain? Yes, very good. Let's take the option chain and let's take evidence from that. What are we seeing? At what strike rates? Right. So give me a second. I'm just opening the option chain. Yes, please. Okay, I have one more question which is here. Will this video be available to view again? Yes, this video will go up on YouTube, so not to worry. So let's check out the option chain. Okay. All of you can see my screen. The option chain, like for example, currently we're seeing Nifty at 10,900. So we have to see 10,900 options as on the money options, right? So let's take this on the money option and change the pen color to black, right? It's lighter screen. 10,900. Now, if you see, this is the change in open interest. So, change in open interest obviously is talking about the change from yesterday and the previous session to today. So, therefore, it is better to have change in open interest uh, understood as the fresh positions, including the close and opening, close of positions of the previous day. So, these are the, you know, 10,900. These are the fresh added open interest on the calls, and this is on the puts. So we see that on the money, immediate on the money calls have very much added fresh open interest. So let me just highlight the only important point at the moment. 355 and 233. These are the additional open interest. Okay. Now the standing open interest on the money puts is much higher than the calls, because this puts goes to up to 18 lakhs, and whereas this is just around 6 lakhs. So therefore we see some sort of balance happening over here. That means standing open interest may, which has been the existing open interest even before today, puts win. That is showing us a lot of bullishness, because The weaker hands are wanting the price to go below this, and the strong option sellers don't want the market to go below 10,900. So be able to go below 10,900. This open interest change has to increase much more significantly. Is this a significant increase? Not a very significant increase. So let's see the other evidences. Let's see what happens with out of the money calls. Out of the money calls have some sort of 6,32, 6,51, and so on. Out of the money puts have around this is the kind of open interest change. So we see this sort of the calls on the higher side, the added open interest. But as we are going further down, we see at 10,700 puts there is a very high interest of open interest which is built up. Okay, so we are seeing again a balance on the option chain, which means that there's nothing strongly bullish and there's nothing strongly bearish. Now, of course, my personal inference is since these are far out of the money calls and these are on the money calls, if the market sticks around to this level and the weaker hands come and buy more calls with the expectation that the market will go up immediately, then the market has a tendency to increase this and then it might go down later, right? And the other scenario, this is the more bullish scenario, is that now when we are seeing that the extremes have been started to open up a lot of put positions, that means not only are the people expecting the market to go down, they're expecting it to go almost 200 points down or more. So that is another sign of pessimism. And open interest with options is a contrarian indicator. So if people are pessimistic, that means there's something bullish going on. And also we see that there's a shock absorber level at 10,900 zone. So again, this is also far greater than this thing. So the option sellers will not like to push the market further below this. So we have to wait and see which side of the change in open interest actually starts getting more heavy, significant to the other when compared. I think that is what we are waiting for, and that is what my perspective on the option changes. So that way, this becomes a no trading zone. Now, of course, in the no trading zone, the market is going in a range. Okay. Now, as we speak, it has got up now. Okay, it's gone up now. So the market is going in a range when it comes to no trading zone. It builds up slowly and steadily when it comes to no trading zone. And your definition of no trading zone will be according to your patterns, according to your prerogative. And when I'm teaching also, especially with live, okay, I like to be a little more conservative. May show you the possibilities, but also show you the risk which are involved with it. Now I see Yes Bank moving. So if Yes Bank is now getting across the high of the morning, this is a confirmation for me. Of course, an aggressive trader may buy over here, as I told before. But now this is a confirmation for me for intraday possible up move at around 195.9. And we also see the broader market is strengthening. So you see how things are coming together while I'm live on the session, and we all can see the things are playing out or starting to play out on one direction. We just saw the option chain and we deciphered what are the possibilities. Now let me refresh the option chain. Keep in mind what these figures are: 355, 233. I'm refreshing the option chain. You will see that the figure on the put side has increased. Okay, so yes, we see 244 and we see 353. This is decreased slightly and this is increased. So the mechanism which is playing out, Pareji is saying please come live every day. Of course, for that I'll have to stop doing a lot of other things. So yes, so as you all can see, what I do and what any other or any sane person does who is an analyst or who is doing analysis is that he multiplies the other factors together, all factors together, and then when the factors are coming together. Now, of course, I gave you the factors which were there, and I said this is a no trading zone, and we suddenly see the market moving up. That means that probably the first logic which we came are playing out. Now the whole idea is not to get impulsive intellectually, okay? Because if we get impulsive and we go and jump into the markets all the time, it is not going to, we are always going to see a lot of mixed evidences. The whole idea is to wait for the times when the market may not be at an extreme, because market has a nature to move in the extremes. On a short term level, the market will always move in the extremes. It goes to extreme downs, it might go to extreme ups, and then it will push the other side. The whole most important point is to wait for the time when one side is super strong. One side is super strong, and that is when generally, and it comes through your variables. And when it comes through your proper variables, it comes later. It comes on the price also. Okay, most people think that the charts are actually first coming from the big moves, and then they call something like price action or whatever these new terms are, which I've never heard. After so many studies of finance, uh, what price action and all people start calling. I think if they want to give another name to technical analysis, better, they understand the variables themselves first. But if you just go behind the action and start jumping, that is wrong. But yes, if you wait for the evidences and you have your clear perspective on a chart, and then you take a trade, you wait for the correct prices to get in, you put the stop loss in the right manner, you look at the daily chart, you understand what these extremes are about, then yes, you are at a much better position. So I was looking at one thing before we started. This thing was Axis Bank. I was looking at it. Today's low as a very crucial level, and right now we can see, yeah, it's still moving sideways. This today's low around these areas has been a crucial level, right? And if I open the 15-minute chart or something, uh, of course a good consolidation would be a better thing to get into, but yeah, these are crucial levels. It is also crucial level on the daily chart. This is what I was seeing. So just a little perspective on markets, guys. Any questions you can ask? Okay, risk reward is the most important thing. That would be my answer. So at uh, the lows, I'll come to your question, Bridget. At the lows, if I go long, okay, then my probability is low, but my risk to reward is very, very high. So I need to make a clear judgment of when are the times I like to go long. Also, I have to make a clear judgment that I don't have to make it a habit to always go against the trend. So I think somewhere in the middle of that is the answer. So while I was talking about these things, about the potential bullishness, if I had some small time frames, the candles alongside to interpret, I would have gone long somewhere around here, right? But then I would have understood that what the potential risks are also. So that is the thin line which we have to understand in trading and technical analysis. And I'm right now also telling you that when I saw the opposite evidences by going through the market breadth, so either this move will be a I'm not expecting this move to be a one-sided move. I'm expecting it to be a sideways move or a subdivided move which will go higher. I'm not expecting that one go it will just go one shot up. Now I may be, of course, I may be wrong, but this is what my variables are talking to me about, right? So Axis Bank option chain. Now, one thing I'll just tell you all that option chains are very good, but also remember that the liquidity which is possibly there at different times of the month, that rules the significance of option chain. Okay? So liquidity is something which is important. You cannot just um, see the option chain just like that if they're not liquid. So when it comes to stock option chain, you must check for the reference of liquidity over here. With option chain on Axis Bank, we see that there are many contracts which are traded. The volumes are very high, and we also see again on the extreme end, we see that the calls also have a high open interest, and the puts have high, but puts have slightly higher open interest. This is showing us extreme downside, but there is a capping. There is a capping, and that capping is not good. On the For the bulls, it is not good. At 600, there's a capping, and then again at 620, there's a cap. On the chart also, if you look at 620, they're important zones. So perhaps we need to see Axis Bank a lot of added open interest over here daily basis. Right now it's more on the bearish side. Again, mixed evidences, but more on the bearish side. Once it's done its extreme on the chart, okay, now a lot of positions will be settled and new position will take time to build. So that is what I can say, is to wait around, right? Wait around for action time, for better moves and better clarity. But yeah, that is one important zone I was saying. How it moves around the zone is the secondary question. So I think we can call it a day. Okay, I have one more question. Okay, thank you so much. Yeah, thank you. There was a thank you message. So thank you everybody. I think we'll call it a day. I'm gonna keep coming live. I was trying to come live on YouTube directly, but there was a some streaming issue. I'll work on it. Thank you, Shantaramji. Thank you, Parisi. I hope you all took away something nice from it. Excuse me. So guys, thank you so much. I'll be signing off now. Those who want to follow my Telegram channel, watching on YouTube, check out the description below. And yes, of course, we conduct training in terms of technical analysis as well as indicators. I do conduct training from time to time. Currently, batches are going on. If for any future batches you want to join, you can contact me directly. Okay, and thank you so much. Have fun, and all the contact details will be given in the link below. Telegram is there always. So those who are checking on YouTube, please subscribe to this channel. Take care. Goodbye. Enjoy.